you have to do clear out accumulated depreciation. Now, can we use the same depreciation calculation we did up there? No, because every time you revalue the building, you have to change, because you've changed the underlying factor, you have to change the calculation. So remember a new depreciation calculation. So starting from 2019, so accumulated depreciation is 90,000 divided by, well, there were 25 years to start with, but then we went through 3. And then we do that for 3 years. So you should get 12,270. Okay, so I'm just going to recap. Starting here when we readjusted this or adjusted this, we have to change our depreciation calculation. So it's that. Of course, the life isn't 25 years anymore because the first 3 years have gone by. And again, we're doing it for 3 years because we're sitting at 22. And that's our total. So to close it, we debit accumulated depreciation for 12,270 and credit the building. So we put our 12,273 in here, which means we have a balance now of 77727. Okay, so what's our next step then? We have to revalue the building. To fair value. So, what is our fair value? Well, you can look up at the top, it's 75,000, or I just happened to write it down here. So we want it to be 75,000. Well, what do I have to do to this building to make it go down to 75,000? I have to credit it 2727. Remember, you guys, circle my numbers like that. I'm just taking the difference. So let's piecing this together. Leave 2 room for debits. Okay. So to the building, we have to credit it 2726. And we put it into revaluation surplus, OCI. Now, can I just put 2,700 here? No, because what was the rule with revaluation surplus? Can't go to a debit balance. So the max we can debit is 2,000. Then that'll bring it to 0 balance. Anything over 2,000 and I'll have a debit balance we can't add. So the max we can put is 2,000 here. So I'm going to put 2,000 here. But we're short then 727. So on the last page, where did we say we'd put that? Into a loss on revaluation. And notice it goes through the net income. So this goes through net income, And if the fair value increases later, you can recognize up to 727 as a gain in net income. I'm just going to put any increase over 727 has to go to revaluation surplus, OCI. I'm just going to recap. In 2022, the building went down, so we had to decrease it. So great, building goes down, but we can't dump it all in revaluation surplus. You can't have a debit balance in revaluation surplus. So the max you could put in there is 2,000. So we put our 2,000 in there. I'll just draw a little. Those two are linked. And then the extra goes to a loss. And we know it's a loss because it's a debit. The building went down. Okay? So that actually goes through net income. So bear in mind, we said this revaluation approach should go through an OCI account. But there are exceptions. That can't go to a debit balance, so we can have a loss. But in the future, if your building went up again, you can put up to 727 as a gain through net income. All has to go to OCI. Okay? So this stuff gets a little tricky. Okay, let's go to page 7 and finish off this question. So now we want to record the entries for the sale of the building, assuming they sold it on January 2nd, 2020 for $93,000. Okay? So let's see what the balance in the building is at 2020. And it's right after year end. So you go back and look here. The fair value at December 19th was $90,000, and we don't touch it again until the 22nd. So that means this is our balance in 2019 and 2020. Remember the depreciation entries you make every year? Don't touch the building. Okay, so first check if depreciation is up to date. Oh, and let's put our 90,000 in. First check if depreciation is up to date. And it would be yes, just adjusted it 2 days ago, December 31st, 2019. Okay? So, what is the balance in accumulated depreciation if we just adjusted it on December 19? What did we do with accumulated depreciation? Closed it off. It's 0, right? And then we revalued the building. So, the balance in accumulated depreciation is 0 because we closed it to the asset before we revalued it 2 days ago. Okay? Now, if we sold this through the year, say April 1st, 2020, you would have to record the entry for depreciation. For how many months is that? January, February, March, for 3 months. Okay, so all how to do that. That's pretty straightforward. Okay, so let's record the sale. So leave some space for debit and credits. So the building is leaving. So we're going to credit building for the $90,000. Now we also have to close accumulated depreciation, but in this case it's 0, so you wouldn't have to put it. But I'm doing this to remind you that you might have a balance. Okay, so I'm just going to say this wouldn't be 0. Be 0 if sold partway through the year. Or a non-revaluation year. Right, because if we did it in 2021, we'd have a year of accumulated depreciation in there, right? Okay, so what else happened? We gave our building away. What did we get? We got cash. And we got $93,000. So are we balanced? Nope. We're short 3,000 credit, so we have a gain on sale. Okay, the next thing we have to do, because this question said, oh, they don't tell you. Oh, yes, they do. This question said revaluation surplus is retained earnings when the asset is disposed of. Okay? So, now we're going to close revaluation surplus, OCI, to retained earnings. So, what's our little balance in revaluation surplus, OCI? And remember, this is 2020. So if you look back at our last page, this was done in 2022, so all we have is 1,000 there. So, to close revaluation surplus OCI, you've got to debit it. And then we credit retained earnings for 2,000. So, just so you know, this is no recycling. Will not show up in net income. In net income, on the statement of changes in equity. Now, remember, you also could do this step every time you revalue your asset. Okay? So you don't have to wait right till the end. Okay, so that's an example of how you revalue an asset, and then how you sell it, and how you deal with the revaluation surplus OCI. Okay? Okay, I'm going to start a new video, and we're going to do just a little bit of this to show how the proportional method for adjusting accumulated depreciation works.